over to the indicator sections, and then you look for moving. The hell? Moving average. You star this one, and you also star the exponential. The moving average, you'd make this one 21. You go to inputs right here, 21, source close. Style would be red. Basically, whatever color you want to make it, you can make it. But just the common color for bearish is red. That's why. Then of course you could save it as a default. But if you're doing this from uh your MT4 on your phone, what you're going to do is choose simple moving average for this, all right? Then for the EMA, this is going to be 8, and you're going to make it blue. Close, of course, and it's going to be exponential. If you're doing it on MT4 on your phone, it will be exponential instead of simple, right? And the number would be 8. You know, the main concept of it is when blue is on top is bullish, when red is on top is bearish, when it's crossing would be the perfect entry to get in on either move. And of course, you would never just go based off of it. It's just like an extra confirmation, like how I showed you all the DXY sauce, you know, how to use it in Confluence with your analysis with GBP USD or GBP JPY, right? So let's get into this whole oh, sorry, let me see something I didn't mark up yet. Wait, hold on. I think I did GCAD. All right, Liddy, so we can do GCAD, right? I'm gonna show you all this sauce. And I am telling you, this works. This works. Like, I have not been using my other Confluence that I normally do just to test this out. And I think I'm going to put all these together, but I've been using this alone. I'm going to show you everything I'm doing, but I've been using this. I've been using just this alone, calling on the signals in the signal group yesterday, right? We only had 1 loss and 5 wins. That is insane. That is insane. Oh, actually 6 wins because I have a swing trade channel as well. But remember, you always want to start Asia. It's Asia. Anyway, you always want to start. You always want to start. Oh, I started to mark up GCAD. Oh, this is old. Oh yeah, this is old. Someone saying something? All right, I guess that's a no. So what you want to do is make sure you start from the monthly, right? And what we're going to use is our raise. And the ray would be the horizontal ray, which is right here. And why we're using this is because it only, sorry, I'm getting a cold. It's only going to drag it into the future from where you place it off, all right? So let's delete this. So when I'm doing this, I always lock my tool. This drawing button right here, what it's going to do is lock your the tool you're using, so you don't have to keep going back and clicking it, right? So on the monthly, what you want to do is look for a recent point where price shifted. Oh, I didn't even get into what order block was, my bad. So what order block is, right? This is when price moves away from one point swiftly. That's all it really is, man. That's all it really is, right? When it moves away from one point swiftly. And you can identify this by looking at price. So let me use my circle. We could see right here, it was in a bullish uptrend. There you go. You have a bearish order block. And the bearish order block right here would be where this blue, oh crap, I forget this thing's still on. The bearish order block would be this bullish candle right here, right? So where is this? All right. Boom. Oh, crap. There we go. Boom. Over right here again. So you don't want to pay too much attention to order blocks on the monthly time frame, but then you'd still want to get an idea of what the monthly OB is, all right? So let me just, everyone should have already got rid of this. So let's just do GCAD together. I'm going to show you all how to do it. You know, I don't like using that drawing, that replay tool. I'm going to do it live. So the order block it would be right here, the bearish order block, and I'll put it right here. I'll make this green because you know, green is what I use for monthly. Then you see we had a bearish trend right here, and price moved away swiftly from it. So right here would be another um uh bullish order block. You have a bearish order block, and then I can zoom in a bit more. We see where it had a bearish downtrend for 1 month. This month it consolidated for a bit, of course, but price shifted away quickly the other month. So I'm gonna put another one right there. Cool. Once I am done with this, what I'm now going to do, now some of you, what you can do, if you don't use colors, you just use one color for all your support and resistance. You could just add a text. This is what most persons do. You can put monthly OB, right? And what's going to happen is price is always going to come back to test this OB once. I'm telling you, family. And if you catch it on the movement, what you can do as well, honestly, is you can ride that, right? You know it's going to be deep. So let me just delete that because I don't want this on. So let's now go to the weekly. Now what I'm going to do is look for order blocks on the weekly time frame. So we could automatically see right here, right? This was a bullish trend. Now, right here, price shifted away quickly. So I'm gonna put that there. I'm gonna make this purple because purple is what I use. Right here as well, we have a very, very, very weak morning star signal trying to be formed. You have your pivot, your long bearish. We formed the support right here because you had a bearish and a bullish, and then it's just a little mini, uh, very, very, very weak morning star signal because it is basically the weekly time frame, right? So right here as well, I'm going to put it, and then you could obviously see as well, basic market structure. Price has to come back up here because of all this. All this has to be filled, right? But now we're going to go to the daily time frame, family. Go to the daily time frame. Now, most persons you can start from the daily. Honestly, you don't have to start from the monthly if you don't want to. But I suggest you start from the monthly to get an overall idea of where price really is moving. So right here as well, we have where price shifted away quickly. Right here as well. And we have right here where it tried to do almost the exact same thing. So I'll just put that there. Now for my 4 hour, I would do the exact same thing as well, but it'd only be two. So right here, we have where price shifted away quickly. I'll make this orange because this is what I use for my 4 hour. I'm gonna zoom out a bit. All right, awesome. Price also shifted away quickly from here. Cool. What I'm going to do is go down. O'Reilly, all right, Shamar. I want to go down to my 1 hour time frame. I'm going to look on this as well. Like you got to zoom in, right? So now what I'm going to do right here, price shifted away quickly. Awesome. Make this blue. That's what I use for my 1 hour. We could see price shifted away quickly from here as well. This was recent. Boom. Zoom down again. 15-minute. That's all you got to do, fam. Now you could mark it, like label it, like I said. If you have a hard time color coding stuff, honestly, color coding is what helped me a lot. But yeah, so now my 15-minute, I'm going to put this here. 15-minute is always black for me. And I have right here as well where price shift away quickly from it, right? Now, what you're going to do after you do this is you're going to go to the 4 hour time frame and you're going to observe the trend. Don't neglect the trend, family. Always pay attention to that, right? We could see right here, you obviously had some bearish trend going on. If we zoom out, let's see what the trend, overall trend was. Wow, this was, yeah, it was a continuation. Now, always remember when, let me take this off. Always remember how price moves. Where's my drawing tool? If it's in an uptrend, what's going to happen is you're going to get your impulse, right? Then it's going to do a correction. Well, once it does the correction move, it's going to consolidate for a bit. Or it could have consolidate when it did that first impulse, then do the correction and come up. So just remember this point right here, because that's how it is always when it's in a trending market. Same thing if it's in a downtrend. Do that impulse. It could either do consolidate for a bit, or it could do the correction, then consolidate for a bit, then continue down. Once you understand this, you'll be able to catch moves, right? And the market is never still, family. If you see the market just moving like this, it is never still. Remember, it's collecting orders, collecting buy stops, sell limits, buy limits, sell stops, right? But everyone has the most orders, it's going to go that way and knock it out, then continue up. Hence, like I said, you have the consolidation and the correction move and continues up. Real simple to remember. Now let's get back to this. What is going on? Sorry, someone's messing in. All right. So I'm going to drag this here. I'm going to create my channel. Remember, if your channel, you just need 2x to touch. And yeah, so it's EMA 8. The EMA is 8 and the MA is 21. Simple MA 21. Make sure it's red. You could, I mean, you could use any color you want. I use red. And the EMA is blue 8 exponential. So right here, you see we trap out price, broke out, came back in. And now what we have right here, because you're drawing this, I'm going to make this orange just so I can remember it's my 4-hour. So if you could remember the example I just gave you, and if you're looking at this, we can obviously see this is a downtrend, right? So based on the 4-hour time frame, what we have going on, we have the impulse, the correction, and now what's happening? It's consolidating, right? Crazy. Once you understand these simple stuff, like you can identify stuff, and it doesn't take you long to get an analysis of what the hell is going on, right? So now what we're going to do is try to understand this trend again. So we're going to come here. Remember, it just got to be 2 wicks that touch, right? Boom. And then if you want to try create a channel, you just copy and paste it. If you're on your phone, you have to draw a next channel. I know it's crazy, but yeah, you have to. If you're not on your phone and you are on, I mean, if you're on your phone and using TradingView, you know, you could just easy just duplicate it and just do it. So right here we have the channel, and we could see where it tested right here as a support on the 4-hour, right? And it came back up, it tested the daily. So now we have some form of information already letting us know that, all right, cool, because price had an order block up here where price shifted away quickly, because there's an order block, price moved away from it briefly. We can expect price to come and test it in the middle or here. So if you're going based off the order block, you never want your stop loss to be, it'll be a short. So let's say we're going based off of the middle right here, right? Wait, why do they do all those colors? Oh, let me just backspace for a bit. Oh, okay, cool. So that was initially there. All right, awesome. Let me just make sure this should color code it. All right, here we go. Awesome. So if we're doing it based off of the middle, which would be this bullish candle right here, what your stop loss is going to be, let's say you put it right here, it's not going to be that high, man. It's going to be right here, 20 pips for us, right? Or what it can be, sorry, let's say you're doing it based off of where the order block initially was. Look at that, 16 pips for us. And sometimes it's going to be 8 pips, 5 pips. Like, it's all based off of that wick. And this is going to help you a whole lot, right? So let's just say you saw in this order block form a price shifted away quickly. And this is what alerts are really going to come clutch with, right? You would have put this right here, or you could have put in the middle. You could have set an alert, and you just set your, and that's, wow, that's still real good risk to reward. 18 pips for 60 pips reward is still good. And you would have not have been in a negative, so that's still good. But let's do a live example for GCAT. So based off price right now, right? What you can do as well, you slap these on if you're still confused, and it's going to let you know. Remember, if the blue is over the red, like you can see right here, it means it's bullish. And when it's crossing, that means, now remember, it's a lagging indicator, so it's not going to move with the current price. So if it's going to be a major drop right now, the red would not just automatically go on top, all right? Just keep that in mind. So as we can see right here, we could obviously just take out our fibs because we're expecting price to drop. Fibonacci retracement, you're going to do it from the relative high, right up here, to the relative low. Now, as we can see, price has tested the 50% retracement level. So now what you're going to do is you're going to use your own bias to determine, do you want to get in now or see if it enters this golden zone again? This is completely up to you, family. But if you do decide to get in now, what it could be, let's say you get in from right here because it's where price is. Wow, this is still a 20 pip risk, right? And the reason why is right, let me put it right here, because this is where the order block initially was, 19 pips, and you could draw it all the way down to where the initial order block was, the bearish order block was, right? And as you can see, price is already dropping. You could go down to the 15-minute time frame. Let's say you want to try catch a better entry. Now, what you would do from here, right? You see right here where price shifted away quickly. Let me get rid of this Fibonacci tool. Here we go. I put a next one right here to indicate, all right, this is where price shifted away quickly. Awesome. Change that to black. And I'll look right here as well. All right, cool. Now, what I would do is, let me take this off. I hate having this on my screen. What's your, okay, cool. So, okay, cool. So now what you want to do is you want to draw your trend as well on the lower time frame. Now, always remember this. Lower time frame analysis sometimes is higher time frame pullbacks, all right? That does not mean it's where the trend is going. Just wanted to point that out. So what you can do right here, let's try to see if we can get some sort of chart analysis going on. Just need 2 wicks to touch, family. Remember that right here. Awesome. Make this black. And as we can see, if you drag this out a bit more, it is on the wick completely. Wow, that is insane. Then what you're going to do right here is drag this from right here, wick to wick. Remember that. Zoom out a bit. Drag this down. There you go. You have your pattern, right? Now, you're not going to go based off of just that. We could obviously see, cool, bearish engulfing. You have an Arami forming right here. So you're getting a bunch of mixed signals on the lower time frame chart. So what you're going to do to help you even more, family, we could see over here, you have a bunch of resistance being formed, right? So you can use your own analysis and go down to the 5-minute time frame to try and look for a cleaner entry. You take out your fibs again, you're going to draw it from the relative high to the relative low. Now, we could see it has already tested its zone numerous amount of times. So like I say, you can use your own analysis and get it on a sell if you wanted to. But we could see from the 4-hour time frame, okay, let me get rid of this right here. In the 4-hour time frame, where we would have entered in, we automatically was expecting it to come down. So super easy order block trading, you know, integrated with everything else I taught you, you know, the other confluences that I taught you. And I'm telling you, this is clutch, family. This is clutch. But does anyone have any questions? All right, awesome, awesome. And I just wanted to point out something real major, right? So if you see, because it already tested the daily order block, right? Now, you could swing this, right? If you see it is respecting the bearish downtrend, you could technically ride this all the way down here, right? But I would be securing profits as it goes down. Definitely be securing profits. And when you're swing trading, you still always want to check the chart just to make sure, you know, everything is still being respected. Your analysis is still being respected. And a next thing as well, what I want everyone to do is watch ICT kill zone videos. I sent it to a friend. I'm going to type in ICT kill zones, right? And he has it up. He has this sauce for free. That is crazy. So he has the London kill zone, the New York kill zone, and the Asian kill zone, and he has the London closed kill zone. All right. So watch these videos. I'm telling you, it will help you with entering your trades when it comes to this, when it comes to your pairs, right? So like right now, probably would not have been a good time. Very high risk, but you still could have. But once you learn the kill zones as well, you just want to trade in those kill zones. But that's game for tonight, family. Thank you all for plugging in. Let's go.